Hey traders, Clifford back with another video on how to trade the charts. So in the last video, we went over how to draw in trend lines using the 3-bar trend line method. Today, we're going to go over one more really big important part of trading that can really make a difference in not only where to buy these trend lines, or where to place buy orders and sell orders at the trend line, but also where to how to get confirmation that the market is on your side. So with that being said, let's get started with that. And just to recap, in the last video, I said we would draw in a trend line on the corn market, which I was watching last week. Drew in my trend line, connecting the 3 bars here, 1, 2, 3. Drew it all the way out, and I said I would buy on the pullback to the trend line, which I did. I took a loss, got stopped out, whatever. But that's okay. That's trading. Don't worry about the losses. The winners will come. Just follow your system. Trade, have a trade plan and just follow that plan. I had my plan and I traded that plan. Even though I took a loss this time, um, you know, the next trade can be a substantial gain. So that's trading, Learn to love those losses and minimize those losses as much as you can. That way, when the winners come, you will be able to capitalize on those long-term moves. So that's pretty much the 3-bar trend line method, uptrend, downtrend, and how to draw in those trend lines. Now today, we're going to talk about the third piece of the puzzle. And this is, in my opinion, one of the most important pieces there is, because how do you really know if it's an uptrend or a downtrend, right? I mean, yeah, you got your trend line, but what else can you use, right? And this is going to be the holy grail of trading. I'm going to give it away completely free to everyone who's listening. So I hope you're all sitting down. I'm kidding. It's very simple. It's only one thing. It's not the world's greatest indicator that YouTubers are selling or anything. It's not going to make everyone millions of dollars with a new indicator. It's the most simplest thing you probably would ever think of if you know anything about trading. And it's very simple. You ready? Here it is. Support and resistance. That's it. Support and resistance. Um, I know it sounds like it couldn't be that simple, but I'm telling you, it really is. All it is support and resistance. That's the holy grail that everyone's looking for trading. And you don't need indicators. But why? But all joking aside, why do I say support and resistance is the king of the market, right? Well, basically, you know, if if you if you're in an uptrend, okay, and the market is breaking above resistance levels, significant resistance levels, you want to be a buyer. It really is that simple. Market breaks above resistance, you want to be a buyer. If you're in a down, let's look at an uptrend real quick here. So like here's the S&P 500. Here's my 3-bar trend line, right? And and so you want to be a buyer on a break above support and resistance. But where do you buy, right? Where do you buy? We're going to get to that in a minute. Secondly, if we are, however, in, let's say, a downtrend, like here's a market here that's been trending down, I think, what is this? The wheat market. But anyways, kind of shows a good example. Trending down, breaking support levels, you want to be a seller. You want to be a seller. And I know some people would say it can't be that simple. And I'm telling you, it is that simple, because the market is showing you that it wants to move higher, or it's showing you that it wants to move lower. All you got to do is follow it. Now, I mean, I'm not going to say that every single support and resistance level that gets broken works out and keeps going in that direction, but a lot of times it does. So here's an example. We're looking at the S&P 500, right? Now, this thing, you know, they were they were talking all about doom and gloom and the tariffs are the end of the world, And as you see, the volatility, went through the roof, right? And then there was a huge bounce, right? But where is support and resistance? What do we mean by support and resistance? Well, if you're new to support and resistance, the market has ceilings and floors. Okay. What do we mean by that? So, like, think of it as this could be a ceiling right here, right? This is a ceiling. This is a market ceiling. Why do I say it's a ceiling? Because see, the market hit it, but it can't break through the ceiling. That's called resistance, right? Um, and on the flip side, you also have support. Although here it's a ceiling, okay, here it's a ceiling. Down here, it's actually a floor or support. Where's another support level? Right here. This low down here. That was a support level, 48.35. Market never broke through it, right? Where's another support level? Down here, 51.36, right? Market never broke through it. So so basically, you know, what do you want to look for when trading these markets is if you know this level here is resistance, 55.32, you wait for the market to close above the resistance level right here. See that daily candle? And that's why I use the daily charts, because the daily shows you where the hedge funds, financial institutions, big banks, smart money that we call it, right? That's where they're pushing the market. And you want to be aware of that. So in my opinion, you want to be aware of it. So there you go. So you get a close above that level, right? So how would you trade this? Well, basically what I did, I drew my trend line, 1, 2, 3 bars, right? 1, 2, 3. And then I wait for the market to break above resistance. And then what do? Well, basically, you know it's an uptrend, so you want to be a buyer, right? But you don't want to buy at the high. Again, you don't ever want to buy at the high, in my opinion. I mean, people who buy at highs, in my opinion, are not going to get the lion share of profits. What I like to do is wait for a pullback. So that happened here on this day here. What is that? 54.24. And one of the ways you can measure these pullbacks is take the last big candle, like this one here. See this huge candle? And when you take this big candle here, this big rally day, right? Just look for 50% of that candle, like cut it in half and then place a buy order. And a lot of times when it tests that 50% of that let me show you what I mean. Try and get a little closer here. So you see if I measure this big candle right here? Let me zoom in a little bit more maybe. There you go. See how the market on this big candle here, that day, it hit the 50% level and then boom, took off to the moon after that, right? That's the perfect buy place right there. Um, so that's how you trade the trend. But but so when do you buy? You don't want to buy until it breaks above resistance, then it pulls back. That's the way, in my opinion, to get the best possible confirmation that the market wants to move higher. Let's look at another one. What is this? Gold. I'll pull up. We'll use soybeans because I took a loss actually in the corn market here, but um, I figured I'd try again with soybeans, right? Because why? Because I knew we were in an uptrend because I drew my trend line. Even though we had a spike low down here, as you see, the market popped right back above the trend line. So in my opinion, it's probably very unlikely that it's going to move lower. I mean, anything's possible, but I don't think it will because look, it just so here's the support and resistance, right? There you go. That's the resistance level. What did the market do? Um, well, it closed above resistance. So what did I do? I measured this candle right here. This big candle right here. Measured it, right? Measure that candle. And if you're new to Fibonacci, I have a video that explains more about what this tool is. This is called the Fibonacci tool, where you can measure different Fibonacci levels. I'll make another video about that in the future. I also have some videos in my history if you're new to Fibonacci, but you see this big candle here, see the 50% level. So as soon as it pulled back to the 50%, I became a buyer, and that trade is open. So far, so good. We'll see what happens. I mean, again, you're going to have losers, you're going to have winners, but for now, it's so far moving in my favor. What's another way you could have done it? Look at this resistance level right here, 1050, right? 1049. Market breaks above. What do? Wait for a 50% retracement of the largest candle and place a buy order. Now, if you're using a stop loss, put it below the low of that last big candle and you should be safe. And then as you see, this trade would have worked out good. Let's look at one more. I'm trying to find like maybe a downtrend. Do I have a downtrend? This is bond. Oh, this is the bond market. Okay, yeah, we could kind of use this one here. So in a downtrend, it's just the opposite, right? Basically, you wait for the market to break support. So here you go. It broke support. Well, this one didn't actually come back and retest. Let me see one that did so you can see what I mean. They're not all going to retest like that, but a lot of them will. You'll see a lot of them will. Just looking at history here. Okay, here you go. Here's one. And this will be the final example. So right here, right? Here is, let me see, was that a break of support? Yeah, there's the support level. Actually, we'll use this one. I'm just looking for to show you how it retests. Well, so here's what I mean. See, here's a big candle down day, right? And if you take that big candle down day, market, look for it to retrace 50%, and as you see, it did, and that's where you enter your sell order. But the best time to do it is when the market proves to you it wants to go lower. This is one I was watching here. Oh, here's a perfect example. This is the Japanese yen, right? Perfect example. That's exactly what I wanted to show you in the downtrend. So here we had an uptrend, but the trend is changing, right? So I didn't draw in the 3 bars on this one, but I could, right? I draw my 3 bars. There we go. 3-bar trend line, right? There we go. Wait for the market to break support. Boom, just broke below support. Where was the support level? The support level was here at 68.79. Breaks below support, measure that candle, find the 50% of that candle. Boom, retraces, enter your short order, and that's it. Put the stop loss somewhere where you think it's safe, maybe up here, I always try and go above this big candle because the odds, see how it tested that high, but it didn't it would have stopped you out if you put it too close. Like if you put it up there, you would have got stopped out. But use one a little bit further away like this, and you won't get stopped out usually. So there you go. That's pretty much it. Support and resistance. Use it to confirm your trends. And that pretty much wraps up how to trade the trend. Again, you got 3 ways the market can move: up, down, sideways. Drawing your trend lines to try to confirm your trends. And then once you are able to confirm your trends, wait for those support and resistance breaks before going long or short. One last example here. See, we have the market trending like I would have probably drew this trend line in early, like 1, 2, 3, maybe around here, right? And you get in early like this. See the market's moving higher. Where's the first resistance level? Right there. Boom. Market breaks above that resistance level. Measure that candle 50%. Put your buy order right there. Put a stop loss. Again, don't use that candle because it'll be too close. Use the next support level, which is around here. So anyways, that's about it for this video. If you enjoyed the video, feel free to like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And as always, my friends, trade what you see on the charts. Trade well.